Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone. Making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh.
Good morning, everyone. Welcome to the Tuesday opening playbook for October 7th, 2025. Hope everybody's having a good morning. How you doing, Nathan?
I'm doing wonderful. How are you?
I'm doing all right. Go
I
ahead.
was just looking. I can't believe gold is at $4,000 an ounce.
Yeah.
It's one of those things where over the last year or 18 months, I think I've predicted a lot of things, or at least been bullish or aggressive on a lot of things. But then when they happen, and they happen so quick, you're still almost kind of surprised, even though you're the one who said, hey, I think this will happen. And that's just how aggressive the market has been. So gold being up there, just kind of a crazy number. I hope everyone's been able to take advantage of that fully. We have played it here and there. Probably not as much as I should. If you guys have done it at all with the overnight tool, let me know. I'd love to hear if anyone's actually taking advantage of it in that way, because obviously it's been a heater, and that was one of the ones I was super excited about to get that that active daily opportunity with GLD. Also, we've got another slightly positive day so far here, just a little over break even right now. I will say AMD is trying to maintain a little bit of upside here, trying not to just totally collapse and fill that void. So up about 5% on the day. And then we've got a lot of other interesting green. Now, I will say it is not super consistent across the S&P. Technology is still doing pretty well. Utilities are doing pretty well. Financials are doing pretty well. Everything else kind of soft, actually, today. Discretionary and staples are both down, which is interesting. Those usually are somewhat divergent. But one positive thing about that, Graham, is that Nike trade from yesterday is already up, what, like 40%?
It's almost already at the max profit. I mean, at least the dollar amount on Nike. I mean, below 70, we're at max profit. It's up 37% right now for me.
I must have got filled a penny better because I'm at 41%. So take that.
You beat me. 30. Yeah, you are beating me.
And then CLSK, I mean, you got to be over 800 at this point now.
955.
So just unbelievable on some of these trades. But yeah, I think we are a little bit concentrated right now with technology moving us. However, I don't expect that to necessarily be the case. I mean, you guys know if you've been around, which speaking of those who have been around, Dave, why don't we actually drop that survey? We haven't dropped that in a little while. Just to get feedback. If you guys have already filled this out, you don't need to. But if you've never just told us kind of how many sessions you've been around, what you're interested in, it's always super helpful for us to get some extra information just to serve you better. Graham and I were actually going back and forth last night on some ideas to make opening and closing playbook more potent, more powerful. We had one idea of kind of building up some different portfolios, which we thought would be interesting, where you might have like on Mondays, we're building a mega cap portfolio. On Tuesdays, we're building like a long-term double up portfolio. And then you guys can kind of track the different things we're building with a little more consistency on a day-to-day basis, and a few other ideas like that. But it's really helpful to get the information from you. So we kind of know, hey, how do we actually help the people who are showing up for us on a day-to-day basis? And Dave just posted that link if you want to click that. It's just a couple questions. Kind of let us know how often you're here and all that sort of stuff. Yeah, I guess for me, guys, it's all about taking the momentum, the ones that are the kind of the low hanging fruit of the stocks that are already absolutely ripping and not getting too fancy. Granted, like I said yesterday, I think we do have to be careful that we're not chasing gains we wish we made. I can sometimes fall into that trap a little bit myself, where especially if you're in my shoes and you've kind of called some big things and then not taken advantage of them as much as you wish, and you're sitting here thinking, dude, I said that was going to go up. I said ANET was going to hit all-time highs, and I only put, a couple contracts on it. And then you almost want to revenge trade your way back into it. So I think you do have to be careful with that, but I definitely don't think you want to be, on the other end of that coin of, hey, the market's oversold, so I'm just going to start, trying to pick tops here, because I think that's the opposite of the game you want to play right now. And I'm curious to see Graham's projection here, as it is Tuesday, so we're going to get his top-down analysis and see how aggressive we're going to be here now that we're officially in Q4.
Yeah, it's exciting times. Gold at 4,000 this morning. We never saw that coming. I hope you can hear the sarcasm in my voice. We've been all over that one. I will say, actually, I had somebody, and I won't say who, but I had somebody who is a very popular trader, does really quite well. What was the word he said when I said that gold would be above 3,000, above 3,500? Oh, he called it a pipe dream. And about almost 2 years ago, I said, over the next year or two, we're going to see gold above 3,500, and he said it was a pipe dream, and here we are at 4,000. So sticking to our guns there. If you guys were at the last class, our target for next year, for year over year, is $5,000 by Christmas next year, just based on the interest rate cut cycles, inflation, and what has happened in the past. So that's a fun little nugget for you guys there with gold. Let me go ahead and share my screen here, and we'll get rocking in the normal Tuesday outlook, Tuesday breakdown, and then do some live trading as well. Costas is up 300% on gold. Awesome. I love it.
It's easy to sell gold
too early. One thing one benefit of my way of buying gold, buying bullion, in my opinion, is the most inefficient way to buy gold, because you pay a fee on both sides. You pay like an $80 plus over spot fee to buy it, and then you pay an $80 selling fee when you sell it per ounce. So it's very inefficient versus just buying GLD. But I will say the good thing about buying bullion, Nate, is that I can't wake up one morning and sell it. I really have to be committed to sell it. So I just haven't had the time in my schedule to ever go take profits on my bullion. So that's worked out nicely for me that I can't sell it early.
Yeah. I think for something like gold, especially if you have like you do have, and you have had a kind of a longer term analysis of it to not make it so easy to hit that trigger finger, because it is easy to fall into that retail trap. I mean, I personally think that is one of the biggest traps that retail traders fall into, is just that the right edge of the screen looks like it's at the top, right? And they have a hard time kind of zooming in, saying, actually, there's more room here. Nvidia used to look like this, and Apple used to look like this, and every stock used to look like it had already filled up the right edge, but really, with a different perspective, there's lots of room there. So I think that's that's one of the things that's easy to do, and if you can do some things to kind of hold your feet to the fire, then by all means. Maybe speaking of gold, maybe we'll have some trivia questions on gold tonight during Dave and Steven's trivia night, because there's some interesting things with gold, and I bet a lot of people might not know kind of some of the underlying trends and currents there. So maybe they'll do some gold trivia.
Yeah, that trivia is going to be a blast. I'm excited to see. I have no clue what kind of questions you guys are going to ask.
Yeah, I have no idea. I haven't got any questions of any personal embarrassing stories. So I guess that's a good sign that they're not going to be asking those. But
What you're saying, we have to take the questions about you out?
Hey, whatever you got, Dave, go for it.
All right.
All
I've got a slide for it if you want me to throw it up there and post a link for it, or I can do it later.
For trivia?
Yeah, for trivia. You want me to just throw the sign up there real quick?
Or yeah, just throw the link in the chat here, guys. If you're not in, okay, yep.
Okay.
Boom! I did it. I stole it. Look,
Yeah,
look how cute this slide is. I had to share
That's
that.
so true.
There you go. Okay, now I'll post the link in.
That's a comma, not a period. Over 1,000 in cash prices, not over $1. Well, it is technically over $1 as well.
Yeah, it is both. It's definitely both.
Yeah. All right, sweet. For the Telegram of the week, I shared this about 2.5 weeks ago in Telegram. I gave you guys, I just said that I've been doing this for over a year. I have not been very consistent with it. I had not really monitored my position sizing, but I did track the trades. And it turned out at over a year, I was averaging, I forget the exact number. What was it? Nate, do you remember the number of what I was averaging a month? I'll tell you guys here in a second.
You
12%,
just
12.7% a month. Which, as you know, is pretty good, especially if you can do it passively in the background. So what I do is I just put together 5 different positions of stocks I really like. I go with the monthly options. I wrap them out. I'll go like one strike out to just get a little over 100% return when it works out. And my goal is only to win 2 or 3 of those to get a really nice monthly return, and then just stack that every single month on monthly expiration day, pick a new 5, evenly allocate, and let it roll. So here we are about 2.5 weeks into it. I'm up 53% right now, which is truly a better than usual month. Again, I average about 12% a month. And that was, again, just kind of doing passively, not really with the full strategy behind it. But so far, so good here. Now, I do have a question for you guys. So you can see here, I'm up 53%, $2,500 on this. I honestly regularly forget which stocks I pick. That's how passive this is. It's in a folder inside of my Thinkorswim account that I hardly ever look at, which is really nice, actually. My thinking, Nate, now is I can do this every month, and I should, and I will, and I'll share it in Telegram just like I did here. Of course, if you're not in Telegram, throw that link to Telegram in the chat. I just posted all of the options picks in there for free. So if you took them, hopefully you're doing well on these trades. But I was thinking, Nate, I'm doing this on the monthly expiration, which can sometimes be hit or miss, because sometimes that third Friday of the month ends up being the peak of the market. Sometimes it's the dip. And then I got to thinking, would it maybe be more smoother if every single Friday I just did an option 4 weeks out and kind of layered in, stacked up this portfolio that way? So that's just something I'm considering here. Right now, I'll just stick with the monthly expirations for you guys. But that, Nate, when Nate mentioned we were talking about ways to juice up opening playbook, make it even more valuable for you guys, that was something that kind of came to mind for me. Is maybe once or every single Friday, we would add in a monthly pick. So that way we're kind of stacking and rolling, where every single Friday we should have a pick expiring, which would be cool.
Yeah, well, I do think to answer your question, almost guaranteed the answer is yes as far as smoothness of equity curve. You might get lucky on picking the right weeks, and maybe like your top end profit wouldn't be as much. But I do think almost guaranteed you have a smoother equity curve just because you would balance out the price of the market so that you're not subject to the exact same market conditions with every group of trades. I think we've seen that in almost every test we've done. So I think doing something where you kind of have one every week and then float it through and kind of get that waterfall effect, as I like to call it, where you have just stuff closing every Friday essentially for profits would be a pretty cool impact to have in your account, especially just kind of taking it passively, one stock, put it away for 30 days, ignore it, and then check on it when the time comes around.
Yeah. So that'll be something we can look into. We did, David. Sorry, I saw you posted the Telegram. That ended up being Nathan's Telegram, so that's good for Nate.
There you go.
You won't find the picks in there. You'll be scrolling. You'll find other picks, other good picks. But if you want these exact options, they're in my Telegram. So we'll get that link for you guys.
Nate paid me to do that.
I'm sure he did. Sneaky Nate.
Right now.
Like I mentioned the other day, I've got a whole host of opening playbook trades open right now. You can see them here. Probably 65% or so positive, net positive overall, up about $1,000 on our opening playbook. So we do this for free, but hey, ideally we can make a little money while doing it too. So up $900 here on our open positions. Can't be too upset about that. O'Reilly has a lot of time till expiration. Lulu as well, so not too worried about those. SMPS is a gap fill that I thought it was an aggressive one we took. So when we take those aggressive ones, I say you shouldn't expect to win 80, 90% of the time. If you win 50% of the time, you're killing it. But I really thought that one was going to work for us and hit a huge, I think it was a 200, 300% ROI potential. But that's one down at 95% right now. But overall, can't complain again. There's our CLSK, waiting for it to get over that 1,000% mark. As time ticks on, that these call options will get closer and closer to that full profit. So we should see it, unless something crazy happens, we should see it take over 1,000% here any time now. Jason, we need to get an update from you on that, on what you've been doing there with the SPY debit spreads that Nate walked you through, or walked all of us through with that option Omega. Market overview, pretty quiet morning, but it is another green day. I actually texted Nate this morning. I said, man, the stock market just goes up every single day, it seems like, over and over and over and over again, which is good. We like those high momentum environments. We like it when stocks are being lifted. We do have a small breather on Bitcoin, but we're saying breather when it's at 124,000.
Yeah.
So this thing is still propped up. It's still looking red hot, ready to cook, ready for a red hot October, I do believe. And then gold again. This is GLD, the ETF, but the futures, the spot price is over $4,000 an ounce right now for gold. Very exciting. This week in the news, we don't have a ton of news coming out. We do have unemployment rate Friday morning before the open, and we do have Powell speaking on Thursday before the open. But other than that, we have pretty standard reports. One thing that will be interesting is the 10-year note auction. This gives an idea of how appetizing is U.S. debt. What do people really think of it? We did have one scare a few months back. I remember I logged onto Twitter that day because the market sold off pretty hard. And it was, fear post after fear post after fear post of the market is cooked. We are going straight to zero from here, and we're at all-time highs. So just something to keep in mind, that these are short-term volatile reports in the market, but they don't necessarily mean we are going to zero. Next week's going to be a much bigger week with news, and we'll be all over it here in the opening playbook. But Wednesday morning, before the open, we have CPI, which is our top report right now, the one we care about the very most. We've got the month-over-month inflation. CPI is our inflation report year over year, and hopefully we see this coming either in line with the forecast, which we will see next week, or below it. Below it would be awesome. If it's above the forecast, that might get a little scary for the stock market. We might see that pullback there that we've been talking about, or that I talked about for like 2 months straight that never came. Maybe it'll come if that happens, but hopefully that does not occur. Hopefully CPI looks good. We don't want inflation to pop back up. That's going to put the U.S. in a real pickle like the 70s, but we'll see what happens. And then we have PPI also on Thursday. For the charts of the week here, this one you probably can't even tell what you're looking at. It's extra blurry for you guys. This is short covering in the S&P. Do you guys remember? Give me a yes in the chat if you remember last week when we did the charts of the week. One of the charts I showed you was that the short interest on the S&P 500 was at 5-year highs. It was the highest short interest we had in the S&P 500 in multiple years. Now, I pulled that chart from a fear post saying, uh-oh, watch out down below. Hedge funds are short. S&P is about to crater. But I told you guys, I actually don't think that's going to be the case here. I think what's going to happen is we're going to see more short squeezing on the S&P 500, which is quite rare. But when it happens, we just have continued momentum. Well, look at this. This is short covering by day, like September, October. We just saw a record amount of short covering. Exactly what we talked about last week here in the opening playbook. That high amount of short interest turned into the shorts buying back the S&P 500 to cover their bets. So we are still red hot. Additionally, I showed you this yesterday, but August and September, the S&P 500 made highs in both of those months. I called for a pullback in both of those months. Neither of those months had a pullback over 3%. So I was wrong. I told you guys I like to be right, but I'm not always right. There was a case where I was wrong. However, taking that data and running with it, what does that typically mean for the stock market? Well, when we see August and September highs, which is very unusual, it's only in the last 75 years, it's happened 8 times here. But each and every time it's happened, quarter 4 has been red hot. 100% of the time, quarter 4 has gone higher with an average return of almost 7%. That's a very, very, very strong period for the stock market. If you annualize that, that would be close to 30% a year, which we know the S&P doesn't move 30% a year. It's about 10%. So that's about 3 times the average speed here that we can anticipate for quarter 4. So I'll give you this again here if you want to take a screenshot. Here's my target on the S&P. 7,135 on the futures market by New Year's. 7,135 is the number. If you look at the money supply, we can't guarantee anything, but the money supply is really, really good at predicting where it's going to be. It says it will be at least 7,000. So my target's slightly higher than that, but we should see good things in quarter 4 based on the data. If you want to see my target projection for the next 12 months, a year from now, I'm predicting 7,750 on the S&P, which is a nice little 10%, a little over 10% run from here over the next 12 months. I actually think like 15% is going to be more likely. With that said, I'm going to show you this chart again. We've looked at this chart every week for like the last 8 to 10 weeks. The S&P or the gold relative strength compared to the S&P just crossed above 0 for the first time since the dot-com bubble. Second time since the 1970s. It's only happened 3 times here in recent years. Each and every time, gold has gone absolutely ballistic. We talked about it in the whole Sunday night breakdown. Gold goes anywhere from 300 to 500% over the next decade, roughly speaking, when we get these crossovers. Right now, gold is up a little over 100%. So yes, gold is crazy high. Everybody thinks, oh my word, I missed the boat on gold. I'm here to tell you, I do not think you missed the boat on gold. Yes, gold hit 4,000 today, but based on the data, this is the conservative range of the data here. It says gold will be at 5,200 by end of next year. By New Year's next year, gold's going to be up another 25%. It sounds crazy, but this is just based on the data. Again, these super cycles typically blast off to the tune of 300 to 500%. The 4-year cycle average predicts a price of 7,000 by the end of 2028. This is what happens when you have high inflation and at the same time you have an interest rate cutting environment. It causes confusion. It causes prices to go up. And ultimately, when prices are going up, gold's going up. Same thing can be said about Bitcoin too, in my opinion. It's just gold is a less speculative version of Bitcoin. So hold on to your seat. I do think this is going to happen. Maybe things will get back under control after that. And we'll see gold dip back down to 4,500 range. Kind of like what happened in 2008, but I do think we are going to see this cycle go absolutely crazy over the next couple of years. Another fun chart for you. I showed you this yesterday as well. This data point right here may be one of my favorite. It's when you take the M2 global money supply and move it forward by about 11 weeks and then compare it to where the stock market is. It's almost a 1-to-1 correlation. So here's what I was telling you about Q4. This orange line here is the money supply, right? We were seeing money printing. We're seeing interest rates get cut, quantitative easing around the globe. What does the S&P typically do? It typically lags it. But when you get that 11 weeks spaced out, look how close this thing runs, right? There's really no debate that this is really impressive. This is that number I was telling you, quarter 4, 7,000 based on the money supply. This technically doesn't show us through December. It shows us through the end of November or middle of December, this is one of the reasons I have that 71.35 number in mind, because look at this. Money supply goes, so does the S&P. Typically, the S&P gets a little ahead of the money supply, and then it contracts, and then it's about to run up, and I believe get ahead of it again to that 71.35 range. Same thing for Bitcoin. Bitcoin, look at this 1-to-1 correlation here. This is insane. If this doesn't blow your mind, I don't know what will. This is saying that Bitcoin, based on the money supply, should be at $150,000 by the end of the year. I hope for you guys who have been here for a while that number sounds familiar. It's the same number we've been saying for the last 2 years in a row now. Bitcoin was at $33,000 when I first came out. Use the data, use the numbers to show you that it should finish around $150,000 by the end of this year. That's what the money supply is saying right now as we are in the home stretch. Here's the other cool chart for you guys. This was an updated one of the halving cycles. Bitcoin is about to go into what's typically known as the banana zone, right? 2013, the last little blow off here in the final quarter, bam, straight up. 2017, parabolic. I don't think we're going to see the same runs that we saw in 2013, 2017. That was for the extra early adopters, but we're still early here in this final bull run. We just popped up here to all-time highs. I think we're going to 150. All right, there is your fun charts for the week. I think that was one of my favorite round of weekly charts here for us. Jumping over to earnings, nothing crazy this week, but earnings season is about to pick up again. We have the first airline stock going this week with Delta on Thursday before the open, and then we'll start to see more and more names fill up this board. Right now, very, very quiet. Not much to talk about here. With that said, I know that not a lot of people wanted to trade the earnings from yesterday's class. But I hope that we'll see. We'll see. Nate and I are working on some pretty cool stuff that isn't going to be speculative earnings trading. It's going to be data-based earnings trading. I don't think anyone else is doing it, but just using historical individual stock performance on earnings over the last decade, 2 decades to see if there's any sort of edge or any sort of loophole with individual stocks that we can take advantage of. So that'll be.
I mean, I think we only got about maybe 5% of people who said they would want to trade earnings that way, but after they see the data and some of the tools we have, that number might go up a little bit.
Yeah, we're going to make it our mission. Again, assuming that the data comes back how we want to do it, we're going to trade it a few times on our own, make sure it's all looking groovy and gravy like we think it will. And then it'll be our mission maybe for 2026 to convince you guys that this is a great way to pick up some cash. Not guessing on earnings, but just playing the data on earnings. So that'll be something to look forward to. For the market overview, last class I gave up on, actually, I think 2 weeks ago, I gave up on my pullback on the markets. We kept getting, I showed you that one chart in line with the short covering. The biggest pullback we've seen since the April lows was like I think it was 2.96%. It was one like this one here or this one here, one of those two. Other than that, it's been 2 to 3% down by the dip, 2 to 3% down by the dip, 2 to 3% down by the dip, 2 to 3% down by the dip. So I just said, you know what? I'm done with this. I gave you guys some data points that I wish I had weeks ago, but I found some data points that in an early bull market, we're actually only about halfway through what the normal run goes until we see a first 6% pullback. So this is actually very normal, even though it feels like, oh my word, this thing just goes higher and higher. It has to take a breather. That's what the data had to say. So what came next here? We just kept chugging along in the trend, new all-time highs on the SPY. So where do we go from here? Well, if we're looking at the fear and greed gauge, looking at market internals here, we're at all-time highs and we are barely out of the neutral zone, slightly into greed. This is crazy to me. I would think that we would have been in extreme greed for the last 6 weeks in a row. We are not. What does this tell us? This tells us that the market internals say that the stock market can keep going higher. We've seen this number for weeks on end. I wish, looking back, Monday morning quarterbacking, I wish I followed this gauge a little bit more closely over the last 6 to 8 weeks. I still traded bullish, but I traded very tentatively. Obviously, no one knew it was going to happen. August, September, typically not so good. That's what had me, trading with lighter position size. But based on the internals here, this thing just kept saying, we're going higher, we're going higher, we're going higher. Same thing for the CPC. We never saw it break below that 0.75 number and stick. However, I posted this in Telegram last night. We actually did just see that happen yesterday. So we had 3 touches here in August, September, and September. 3 touches. at 0.75, which is our typical number here, like May, just to take some profits. All right. And then when it flips back above here, that's when you get heavy bullish, touch, bounce right back to neutral. And then yesterday at the close, once the data was in, we did get below that 0.75 number, which is just a little warning sign for us that, hey, maybe we will start to cool off here for a second. But I'm still not convinced anymore. I'm not convinced that we're going to get an 8 to 10% correction here. It might just be a breather. Seasonally speaking, October, November, December, hottest quarter of the year. A lot to be excited about on the seasonal front. A lot to be excited about here with the presidential seasonality. First year of a new term. This red line is the one that we follow more closely, and it's even stronger than the green line. So a lot to be excited about here. So my upcoming prediction, I lost the slide. I was going to say we're going to keep staying in trend. S&P should keep moving higher. But just watch out for a quick breather. Don't be panicked if we do get a 3%, another one of those 3% dips that we can buy back up, just because the put to call ratio is saying that, hey, we've just kind of touched that number. Let me see if I can find this one. July 20th. So that's right here, July 20th. That was what happened right here. So this one dipped below. That was right here. What happened? Just a quick breather. We went higher from there. All right. Let's see if I can find this one. May 16th, right here. Same thing. Put to call ratio said, hey, we're a little hot. Just a quick dip, right back at it. So hopefully we get something like that. But I do think we're just going to keep staying in trend here. So sector view, amazing month for October across the sectors. If you've been paying attention, technology is the number one sector seasonally speaking. We also have financials, staples, and healthcare typically that perform the best here. However, I'm not loving staples right now, even though it looks really good seasonally. We know right now on a relative strength basis, it's not that great. However, there is one that's slowly moving up here. Obviously, Bitcoin made a great jump. So it jumped 5 spots. It's more volatile than any of the sectors. So expect this one to look like that more often than not. But notice this. Who's ticking up? Who is sneaking up from the bottom? It's our good friend, healthcare. So here, again, here's the seasonality. Healthcare is the 4th strongest sector for this month. Seasonally speaking, it was a terrible one near the bottom, right? It was second to worst last week. But now we're 1 weekend into October, and it's moving higher, doing what it seasonally normally does. So that's one that you definitely want to keep an eye on. Obviously, Lilly has been on fire lately, but I think Novo Nordisk, NVO, is one that could really catch fire here as well over the next 3 months. So I'm just going to type it in the chat. NVO, Lilly are my 2 favorite healthcare stocks. There's a lot of really good ones. I think especially as AI continues to grow, healthcare is going to get better and better because it's going to be able to use technology to advance things, which will be awesome all around, but also awesome for those stocks. So my top sectors, we're just widening up this basket. It makes it much easier for us to trade versus August, September. We had 3 sectors that I wanted to stick to. Pat says, what about Humana? Humana, yeah, that one looks nice as well. Lilly and Novo is one that I've been trading a lot. UNH, have they bounced back yet? UNH would be a good one. I know Buffett likes UNH because they got beat to smithereens, just absolutely blasted in April, May, and June with all of the news. But UNH could definitely be one that runs back at least to 500 from 350. That's a really good good tip there, Chris, in the chat. So thank you guys for posting in there some other good healthcare stocks. With that said, we're widening up our basket here. Technology is still the top dog for us, but healthcare sneaking in. Financials are strong. Industrials are strong. Communications are kind of taking a breather. They've been red hot, but I still love the communication stocks. And of course, look at even gold is still at the top of the list. Small caps up here as well. Nate, we need to start to plan how we're going to trade small caps a little more effectively here in the opening playbook because they're going to get red hot again. Even stocks like Rocket, RKT, which is taking a big nosedive today, down 4.5%. If you look at Rocket on a chart, it's not a buy opportunity today, but it's about to be a darn good buying opportunity before what I think is going to be the next run up. So we need to really tune in here, Nate, and see what we can do for the folks.
Well, that's probably another good question. Like we keep saying, we didn't get a ton of great feedback on the earnings. We did get a couple. I don't want to disregard the people who said they would love it. So we got a couple, but maybe a different question would be, how many of you guys would like if on our approach to small cap, we didn't just give you some IWM trades, but we built some analysis for how to actually identify the best small cap opportunities with some specific stocks. That's something that I have done very little of. You guys probably know if you follow me, I'm mostly trading the big dogs, major, mega caps, large caps. But with the technology and the data we have available, it's another thing that I think we can probably explore and get more exact on, finding and isolating the best smaller cap opportunities. So if that's something that you guys would be interested in us kind of building a portfolio or, one day a week focused more on small caps, give us a yes on that one. Maybe that, itches the back a little bit more for people who are, coming to these sessions, wanting to get the most value possible. That's exactly what Graham and I want to deliver. And I know historically we would not give a ton of small cap picks on opening and closing playbook, but I think with the opportunity we have in the market right now, I just think there's so much upside. And like I said, some data that we can actually go in, dig deep, and look through thousands and thousands of small cap stocks and really find high conviction trades. That's something I basically never would have said I could have done in the past, but now feel a lot more confident. Maybe that's something that you guys would get excited about if we had a couple sessions or one session a week, let's say, focused on finding the best small cap opportunities.
Yeah, I think that'd be fun. They're one that most people don't know this, but small caps still actually, if you look over a long enough period, have outperformed all of the broad markets. They've been, pretty much lagging, kind of lousy for a little bit. But recently they've been picking up steam and they're really, really powerful. Those are the companies that, like Oklo. Think of Oklo. Oklo is now a large cap, but it was once a small cap. Just not that long ago was a small cap. Tickers like BITF, tickers like Kava. See, does everyone remember when we traded Kava for a while? Those are the kind of opportunities that we're talking about here with the small caps. The ones that they're more speculative on a stock basis. It's not like buying Apple or Microsoft, but they really do have the room to run 30, 40, 50, 100% on the underlying. So that would be fun, in my opinion. All right, where was it? Oh, we're jumping over to the Apex. All right, let's go ahead and jump into the Apex top signal of the week. Let's get some trades here on the board because we don't have enough. We got like 12, 15 trades open, but we need more. Pulling up the Apex software here. Check this out. I just love this thing. It's so pretty. It's so much easier to use. Scrolling here, you see we have a lot of active signals that the members can take. We have a new entry on AMD, which it should come to no surprise that it had that massive gap up. So here's your target in price on AMD. 227 target. What was the high? 226. So it almost hit the target this week, which is nuts. But 227 target. Obviously, the option trades are down here. We also have one on Bitcoin, which this one has hit the last. Actually, I don't know if it hit this one. Let me see the target here. Target 71.91. It almost hit that one. So hit 1, 2, 3, almost 4 in a row. We've got our 5th entry now. You can see the back test here on Bitcoin. Rock solid. What I'm going to do, I've already got a lot of trades on Bitcoin, but I'm just going to go ahead and pull a wrap order here, just saying I bet you Bitcoin's going to keep drifting higher here over the next few weeks. Of course, in this case, we're going to be looking at Bitcoin matching with the average hold time, which was 35 days. So here, I'll post this in the chat for you guys. If you want to trade this one on Bitcoin, again, I already have a ton on Bitcoin, but this is with ticker IBIT. Slightly, actually, this one might not have refreshed yet because this one should be actually no, it's already near max value because Bitcoin is or IBIT is at 69.81. But if you want to go a little bit more aggressive here, you can just widen up those strikes. Let me go look at my end here, just to see because it's a 50-cent strike that's pulling. If you just go to if you just buy the 69.5 and sell the 70.5, you can get a 100% ROI. Either way, this one's really safe, much safer in my opinion, with a really, really nice payout here on Bitcoin. If you want to go more aggressive, which I actually don't know if this is one you want to take right now, given that Bitcoin just made a crazy move. It may cool off for a second. But if you want to go more aggressive, it's using that profit target price at 74.70, sliding right underneath it, and using the 7th of November 74 strike. Right? Max ROI is 203%. I'm not going to take that one. I've got enough open on Bitcoin right now. If you flip over here to AMD, active target 228, really nice success rate over the past. I'm going to go ahead and look at a wrap order on AMD as well, see what kind of odds we get here. This one is, let's see what AMD, oh man, yeah, 60-minute is about to hit. Let's see if I hit. Oh, I did hit on SPX. I have not hit on XSP yet. But SPX, oh, no, that was more SPX. All right, AMD currently is at 215. So notice this is wrapping it at the current price. The strikes here are a little bit wonky because AMD did make such a move that it now only has $5 width strikes because of that huge gap up this week. So this was one that typically you want to see $1 strikes or 250 strikes. That's why this one's a little bit wonky. But here, I'm going to take this one. I'll put it in the chat here on AMD. I'm going to post the net ROI at expiration right there for you guys. You can follow along. Now, I do want to let you guys know that while these are all viable trades, actually, this one does have, on the 24th of October, they do now have 250 wide spread. So if you want to just do the, I'll give you this one as well. Nice, 50% on Nike, love it. If you want to do the 212.50 call, I just got filled. Oh man, I just lost. Let's see what I just got filled at. 120. So that's a little over 100%. It's a little bit better trade, actually. I would say 108%. Now, just keep in mind, these are the top Apex signals of the week. New entries for us. Love it. It's using this data to time everything up. With that said, this tool is most effective to trade on Fridays. So if you have the Apex indicator, don't worry necessarily about rushing into these. I would just check in on Fridays to get you the most effective entries because we want to use that full week of data. So we're going to have new entries most likely by Friday. And like, you never know if, well, this one's a new entry from last week, but AMD is not going to fizzle. You never know if a stock is making the entry signal on Tuesday, but by Friday it fades and it's no longer a valid entry. So that's why I recommend, if you actually have the tool, check it on Fridays. It's the most effective day to trade it. All right, this one gets me excited. This usually says the new hot sheet pick of the week, which you know the hot sheet is my free seasonal report. You can get it on your desk. The dashboard is the new version of the On the Clock Stocks membership, which is much more in depth. You get far more mini picks with the options now all pre-selected. Again, that has not gone live yet to the members. It's going to be live here in the next week or two. So in the meantime, I'm just going to pull from our calendar here. AEM, it's a gold mining company, is seasonally bullish right now. It's gone up every year for the last 10 years in a row over the next 25 days for a 4.3% move. So I love that we're bullish on gold. And what do you know? At the same time, a mining company is not only one of the prettier charts out there. You can see it right here, but it's also seasonally very, very strong. So, of course, here in the upcoming weeks when I have the dashboard, I'll just pull up the dashboard and we'll select some options from it. But today, let me go ahead and jump on over to, if I can get my thinkorswim to move up here. We'll jump on over. There we go. I'm hearing some dinging in the background. Is anyone here dinging? I wonder if it's my Telegram. I thought I muted it, but
The announcements in here.
Oh, I see. I was wondering, I'm like, where's this coming from? All right. AEM, just a beauty, seasonally strong. It goes up over the next 25 days, historically 10 years in a row. But there is a caveat here. It does have earnings on the 29th and 30th. Right? So they have the earnings report on the 29th after close and then the conference call in the next morning. So I'm going to give you two trades here. One that's going to slide in ahead of earnings. It's going to be a safer play here on the mining companies, which, by the way, we need to put together a full mining stock report on or mining company report for you guys, because if you look at their profit margins, they're still grossly undervalued, which is crazy. I mean, the stock's gone buck wild. They are still crazy undervalued if you look at the margins they're making on gold right now, with gold, again, at $4,000 now. All right, AM, I'm going to give you a trade that slides in before earnings, and then we're going to talk about another way to play it. So I'm going to go safer here. This is a great price if this is true. 78% return on AEM, even if it falls $1.50 or $1 here over the next couple of weeks. So we expect AEM to go higher. It typically goes about 3-4% higher from here, but I'm going to play a little bit safe, and we still get around 80% return on investment, even if it falls. So this is AEM. We're going to be buying the 24th of October, 165 call, and we're going to be selling the 24th of October, 167.5 call. Right now, debit of, it was 140, it was 135, now it's 145. I'm just going to say 140 here, and I'm going to let that go ahead and sit. Filled right away at 140, so maybe you can go even cheaper. Again, that's going to pay 78% return on investment, even if AEM falls to my crosshairs here by the 24th. So it can go chop around sideways. It can not follow this typical bullish pattern that it normally always does, and you can still get paid. If you want to go more aggressive, you can wrap it. You can go out of the money, do whatever you want. Now, typically, this is a 25-day average hold time. So 7 plus 25 puts us at 32, which puts us to November 1st. All right. Problem is, we've got earnings before November 1st. Everyone sees that. Earnings before November 1st. But if we look here, look at the past on AEM. Do you guys see much of a move on earnings? Do you see much of a move on earnings? Let's keep going. This stock does not move on earnings, typically speaking. So if you're not so concerned about the earnings here, which I'm not, because we know that it typically does not move on earnings, we can go ahead and extend that trade through the earnings to get that full seasonal day, which just gives us an extra week here, in which case I can be a little bit more aggressive and see if we can get a little better bang for the buck. Oops, I'm hitting the wrong button. All right. So if you're not worried about the earnings, because you know historically, again, it definitely could be wrong this time around, but historically it does not move on earnings. We're going to be able to use the 31st of October expiration. I'm going to wrap it at the money and go for a full profit. Another little note here, even if you are worried about earnings, this is at 125, so you get 100% return on investment. Actually, a little better than that right now. Filled right away at 120, so 108% return on investment if AEM gains less than 1% over the next month. It averages 4%. You get 108% return on investment if it does 1/3 of what it normally does. You can go out of the money. Of course, the dashboard's going to do this all for you automatically. If you want to go to its average move, you'd use the 172 and 175 strikes, and that's like 150% return on investment, a little over that. All right, I'm all over the place a little bit right now, but here was the point I was trying to make originally that I totally forgot to make. The earnings date is coming up. We know it typically does not move on earnings. However, here's what we do know, and here's what got Nate and I thinking about this. We know that AEM has gone up the last 10 years in a row during this date range right here. Everyone agrees with that, correct? Based on the data. Everyone understands that? What does that then also mean for the stock? That also means that the earnings have drifted higher, more likely than not, for the last 10 years in a row. So these Q2 earning, or Q3, I guess. So these got to be Q3 earnings were positive 10 years in a row. Gold has not gone up every single year for the last 10 years. Gold has had some pretty ugly years, actually, over the last 10 years. However, for some reason, AEM has gone higher on this specific report for the last 10 years in a row. Explain that. Nate, do you have an explanation for us of why that might be?
I don't have an explanation, but I'll trade it.
Exactly. I don't either. I don't have an explanation. Why has AEM gone up on Q3 earnings 10 years in a row now? I have no clue. But could that be a little anomaly or just a little loophole in the market that we might be able to take advantage of? That's kind of what we're saying when we talk about trying to identify just odd price patterns with earnings. Stuff like that could be really just interesting. Like, I don't know why that happens, but who cares? Like Luigi said, who cares? If it goes up, it goes up. That's what we did with Fortinet. I've been doing it every year in February for a while. And then we're like, maybe we could do that with more stocks than just Fortinet. AEM is one of those stocks.
Yeah, and like I said yesterday, I'm also very interested in the ones that just, like you said, kind of underperform and do nothing, because there's a good chunk of those that I think are great opportunities.
Yeah, two things. I would love to know the ones that either go up every year or they go down every year on that same earnings report, because we can wrap it. Or like you said, like if we see market maker moves, like this is not crazy implied volatility. But if we have a stock, I don't know, what's Delta Airlines? 94% implied volatility. And let's say, the market makers are predicting a $4 move either way. Let's say Delta averages a $2 move for the last 10 years. That's one where you can, trap it in there, Nate, and hopefully make some income on it with anomalies like that. All right. Well, we'll talk about that more in the coming months and years. And in 2026 is our mission to make it totally awesome. Of course, if it's not awesome, you'll never hear from us again about it. But
yeah, we'll pretend like we never said anything about earnings.
That's right. Awesome. 60-minute just hit for a lot of people. Love to hear it. For Newton here, I'm just going to post these in the chat. These were ones that triggered yesterday. If you guys just want a little watch list there on Newton, actually INCY is one I've traded in the past. It's very, very good. That is a healthcare stock as well that's heating up right now. So we talked about healthcare sneaking higher. INCY is definitely one you want on your watch list. So go ahead and add that right now. The AEM trade is good to go right now, Sherry. When I was talking about Friday, that was for the Apex signals. Apex signals typically perform best on Fridays, but AEM is good to go today. Punch it in there, let it rock if you want to. Obviously, it's up to you if you want to take the trade. I'm taking it just based on the data. All right. I'm not going to go through all these picks. I just wanted to get you guys some Newton stocks right now. Let me just, wow, there's a lot of stocks on the down scanner today. I've almost given up on trading short just because it's so hard. Nike, wow.
I was going to say, we got Nike.
There we go. This is like, if you look at most traders program, I would say, and you just break down long versus short, almost everybody has much better stats trading long than short. Just a fun fact for you guys. But hey, look, that's nice when it does work out. There's our gap fill there. We took it yesterday in the closing playbook. Anyone take Nike with us yesterday in closing playbook? We gave it a full week to fill this gap. We're there today. So you could take profit today on the technical pattern if you guys did take that.
Yeah, I'm up 65%. I feel like I should just go ahead and take it, right?
I think this is one you want to take it because the gap did fill. So our technical pattern that we are trading did come true. And that's when we want to exit. It could bounce from here. We don't know. It's hitting some support here on the 200-day moving average as well. It's the time to take profit on Nike.
By the way, I, as people know, I'm not a big trader to the downside either. I think, like you said, you kind of take away your biggest advantage as soon as you start trading to the downside. That's why I'm mostly bullish. That's, I'll talk about automated options here in a minute, which is completely focused around hijacking bullish moves. Kind of my flagship way to do that. Interestingly, yesterday, I had a really, really nice day yesterday. One of my better days in my active trading account. And my biggest net gain was to the downside yesterday. That was on T-Mobile. And so it was interesting. I looked at my account and said, oh, really nice quantum leap today. And I would have thought it was more because of IBIT or some other things, CLSK. But actually, T-Mobile to the downside was my biggest single winner yesterday. So it is nice, I think, to have one or two of those out there that, directionally give you some backup when there is some weakness in certain sectors. And I think we're seeing that right now to some degree. I mean, energy, staples, discretionary has been a little bit weaker just the last couple of days. And technology, utilities has been really strong in carrying the day. And so in those situations, I'm probably 90% bullish, 95% bullish, maybe even, but just a couple to the downside there to help you out when the market is a little bit weaker.
Yeah. No, it's nice. And especially like, it really just depends. Like, I do not like to take downside trades all the time. But when you consider something like, hey, CPC came in overcooked yesterday, which means we probably should get a cool off. I mean, I showed you that every single time it drops below 0.75 and sticks, we just get a healthy market cool off. So that's a good time to be looking for those opportunities. Just, again, we talk about aligning your, swimming with the tide here. You don't want to swim upstream. So if the tide's saying, hey, we might have a cool off, maybe add a downside trade, which is not shocking to me now that we have the markets cooling off today.
Yeah. Yeah, I would agree with that.
Chris says wrap ODA. What is ODA? Why not go to the downside? Things go down a lot faster. Would you indicate, Chris? Just because stocks don't normally, I shouldn't say stocks don't normally drop. The S&P likes to go higher. Over time, it goes higher. So it's much harder to pick a downside trade than an upside trade. All righty. Well, Nate, did you want to walk folks through kind of what you're thinking as far as, maybe even if we get some chop here, or even if markets drift higher or get a little pullback, how you're kind of setting up your trade?
Yeah, well, this is kind of exactly what I was talking about yesterday. I've kind of been banging this drum because I think this is where people go wrong when we have such a good opportunity right now in the market with how bullish it is. That, in my opinion, this is just my opinion, take it for with a grain of salt, but I think you don't want to be so aggressive that you blow up and get revenge trading and turn your account into a loss because you have 1 week pullback. But you also don't want to start getting to the short side of the market and say, hey, it's too high, it's oversold. I think you want to trade to the upside, take advantage of the momentum, but do it in a balanced way where you're in a good position to hit winners on a consistent basis. And so like my flagship way to do that is called automated options. It's a 2-week trade. All we're doing is quote unquote hijacking the bullish moves. We see a small move in the market over the course of a couple weeks. Now, how many of you guys were in my training on Friday? My training on Friday, I did kind of a blended training of how targets work, how time decay can help you once you get on the other side of the line in the sand, and how the target actually comes towards you with debit spread, which is really unique compared to any other kind of trade where the target is coming with me. Just give me a yes in the chat if you guys were there. Well, this is kind of the culmination of that type of strategy. So if you guys are looking at the market right now and you think, hey, based on what I'm seeing over any 2-week period of time, this market is going to have a pretty high probability of at least making some move up, even if it doesn't go straight up over 2 weeks, even if it has a little flush and then back up. If you think it's going to have some move to the positive direction over your typical 2-week window, well, that's exactly what the entire strategy is built around, just to capture that one move over any point in the 2 weeks. So I'll walk you guys through that. Again, this is what I would say is probably like my most stable way to capture